Hey, I'm Sophia, and if you're here, you've probably heard the news. New York City has a new mayor, Zoran Mamdani, a Democratic socialist. He just won the election, and right now everyone's asking the same thing. What does this mean for us? His campaign promised a $30 minimum wage, rent freezes for over 2 million apartments, city-owned grocery stores, and free public buses. Big promises, bold vision. For a lot of people, it feels like the city might finally start working for them, not just for developers and investors. But here is the thing. Campaigns run on hope, governing runs on math. And in New York City, math gets expensive really fast. So today I am breaking down what's really happening, why it matters, and most importantly, what this can mean for your portfolio. So if you care about where your money moves, hit subscribe so you don't miss a beat. So let's take a closer look, not just from the left or the right, just through the lens of what happens next. Because whether you love or hate these ideas, they're about to shape the lives of more than 8 million people. First up, we've got that $30 minimum wage proposal. Today, New York's minimum wage is $16 an hour. Doubling that sounds like victory for every barista, cleaner, or line cook trying to survive in this city. More money in your pocket means more breathing room, but here's the catch. The mayor doesn't actually control wage laws. That's done by the state government. Still, if Mamdani manages to convince Albany what's going to happen next, let's put this into real numbers. Let's picture this, okay? You are the owner of a small restaurant. You have 10 full-time employees at $15 an hour. Their yearly payroll is around $312,000. At $30 an hour, that would become a $624,000. And that is before rent, insurance, or any type of ingredients. So being really honest, unless you're selling lobster risotto to Wall Street bankers, that's unsustainable. So what do small businesses do? They cut hours, they raise prices, they automate. Actually, Seattle went through this in 2015 after they raised their minimum wage to $15. A University of Washington study actually found that while wages rose, total hours worked dropped. And some workers actually earned less overall because of it. We're talking about $30. If wages rise faster than productivity, then prices are going to follow as well. Your $2 pizza from New York becomes $4, your $5 latte becomes $9, and that's the paradox. You take more money, but everything costs more. And so the very people that this policy wants to help might end up paying the price somewhere else. Next, we have rent. Over 2 million New York apartments are rent stabilized. Freezing rents sound like relief. For families drowning in rent hikes, it's a lifesaver. Here's the truth, landlords aren't immune to rising costs. Property taxes, repairs, insurance, and in this city, maintenance isn't optional, it's survival. When landlords can't rise rent, they start cutting corners. What does that mean? That means leaky ceilings stay leaky. Elevators break, mold spreads. Actually, there's an example, Berlin in Germany. They tried a citywide rent freeze by 2020. Their rents dropped at first, but then the supply of available apartments collapsed by almost 40%. People started illegally subletting, investors backed out, and a year later, Germany's constitutional court struck the law down. Freezing rents doesn't freeze reality. In New York, where many buildings are more than 70 years old, it can mean decay and, ironically, fewer affordable homes in the long term. A more balanced idea might be targeted rent reliefs or tax credits for landlords who maintain affordable units, right? Protection for tenants without pushing owners out of the market. These policies might sound fair, but if they don't balance both sides of the equation, they might end up as well failing. Now let's talk about these city-owned grocery stores. The goal here is simple. Stop food deserts, stop price gouging, and make healthy food accessible to everybody. And honestly, that's a really noble goal. But grocery stores are brutal to run. Margins are razor thin, usually 1 or 2%. Everything depends a lot on small things like trucks, storage, refrigeration, timing. If the city opens stores that sell milk for, let's say, $2, when private stores need 3 just to break even, guess what happens? Private stores will close. At first, you get cheaper food, then you lose competition. And when that city-run store forgets to order eggs for 1 week, what happens? There's nowhere else to go. You can't just nationalize a supermarket aisle. Maybe a one pilot store could work, maybe 10, but scaling it to a full citywide system doesn't sound so sustainable. The intention is right, but the execution could turn this into a bureaucracy. And guess what? In New York, bureaucracy never sleeps. One of the highlights of his proposals were free buses. Now, this one's really popular across social media. There's no Metro card, just hop on that ride. It feels fair, it feels freeing, but again, buses aren't free. Drivers need salaries, mechanics need paychecks, fuel, repairs, cleaning, it all costs money. The MTA already runs on a $19 billion annual budget and still expects a $3 billion deficit by 2028. If fare revenue disappears, that money has to come from somewhere. What is it? Taxes, debt, or service cuts? Actually, let's rewind a little bit back in time. Kansas City. They tried this 2019 idea, the first big US city where you had free fare transit. Ridership rose about 28%, but funding gaps widened. Boston also tried it out too. Same issue. Free buses work only if the government finds a permanent revenue source. Otherwise, free quickly becomes broken. And when service quality drops, guess who suffers the most? Low-income riders. That's the very people this policy actually aims to help. And here's the bigger picture. Zhoran Mamdani's agenda isn't random. It comes from real frustration, from decades of inequality, of working class exhaustion, of a city that feels more like a luxury brand than a home. His supporters don't just want change, they want justice. But even justice has a price tag. Big ideas require big budgets. If New York doubles wages, freezes rent, runs grocery stores, and removes transit fares, tens of billions of dollars every year are going to be put into that. Where does that money come from? Higher taxes, debt, cuts everywhere. We've seen this version of this play out before. We've seen Sweden in the 1970s. They expanded this social program super fast and had to scale back in the 1990s because they had too much debt and it piled up. The lesson is super simple. Ideas work best when they're tested at first. When they start small, measure, and then you adjust. Don't just go all in until the data says it works. Because if you break the system you're trying to fix, nobody will actually win. All right. We've talked about politics way too much in this channel right now, but let's pause for a second. What everybody is asking right now is, what on earth does this mean for my portfolio, for your portfolio? If you're investing, whether it's through ETFs, index funds, or just your 401k, Mandani's economic agenda could shift how money moves across this entire city, and maybe even beyond it. Here's how. We first see these labor costs. If the minimum wage drops to $30, corporate margins shrink. That hits local restaurants, retail chains, and small cap companies the hardest, of course. Investors may start pulling money out of those sectors and moving it towards automation, tech infrastructure, but what could happen is that we could see New York Small Business Index dip, while tech and logistic ETFs could tick upward. We now have real estate on the talk again, because a rent freeze sounds good for tenants and it chills investors' confidence. But if landlords can't rise rents, they can't justify new developments. So you might as well expect slower construction growth, fewer multifamily projects, and possibly a shift toward commercial or out-of-city properties. If you hold REITs, especially those focused on residential property in New York, watch those earning calls closely because they might not look good if this goes into place. We have also those public spending and taxes, because free transit, city-run grocery stores, rent control, all of that requires a lot of cash. And when the city spends more, it also has to raise revenue somewhere. That could mean higher taxes on high-income earners or corporations. In the short term, you might see municipal bond yields rise as the city borrows to fund these programs. But in the long term, if spending isn't matched by productivity, inflation could tick up. and inflation quietly erodes your portfolio returns unless you're hedging with commodities or inflation-protected securities. These policies aren't social experiments. They're actually moving capital. They're actually changing incentives. They rewrite who gains and who loses in this market. If you're holding New York-based assets, real estate, municipal bonds, or regionally focused funds, this election is your signal to rebalance, perhaps. Diversify geographically, stay liquid. And I would recommend to keep an eye on how these policies actually roll up, not just how they're announced. And if you really care about these upcoming moves, please subscribe. I'll keep tracking how these moves ripple through New York's economy, sector by sector, so you don't miss a beat. But going back to this election, Zoran Mamdani's election marks a really big turning point of New York. I would think of it as a test, not of just progressive ideals, but whether bold ideas can survive contact with real economics. A $30 wage could lift thousands or close hundreds of small businesses as well. A rent freeze could protect families or destroy housing stock. Free buses could boost mobility or break the transit system. None of this is simple, but here's what is true. People want fairness, people want dignity, they want a city that doesn't force them to choose between paying rent or buying food. And that's why this politician has a huge movement. That's why people respect him. And actually, that's worth respecting. But still, hope alone can't fund policy. Math matters a lot. Implementation matters a lot too. And if Mamdani wants his dream to last, he'll have to make the numbers work, but not just the narrative. Because in New York City, where every dollar is stretched and every vote is hard-earned, ambition isn't the enemy of realism. It is actually what makes it real. And that's it for today. Thank you for watching.